Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining me for this segment, we have Simran Singh. He is the Head of Enterprise Business Development over at Greendot Bank. We're going to discuss banking as a service and embedded finance relative to growing that organically. It is great to have you with us, Simran. Welcome to TradeTalks.
Really,
that's what the question is. Like the growth of embedded finance, why that versus organically growing the infrastructure?
Yeah, the way that we think about it is our mission is to provide seamless access to money for our consumers, and it could come directly through us or by partnerships. So if you look at our partners like Apple, Amazon, Uber, Intuit, Walmart, Wealthfront, they just help us reach a lot more people much faster than we would do it on an organic basis. And as long as we are the backbone behind people's ways to access money, for us it doesn't really matter.
Right.
I would say that over the next 2 to 3 years, our focus is going to be a lot more on growing our partnerships and growing access to the money through the partnerships rather than through our direct channels.
Yeah. Actually, we just had Stockpile with us yesterday, so one of your partners there. What are your expectations for the verticalization of the banking as a service space? What are some of the opportunities and challenges that you're looking at?
I think I'm the son of an economics professor, so I tend to think of everything from a supply-demand perspective.
Right.
So from a supply perspective, what we're seeing is a lot more consolidation of the industry in the banking as a service space. A lot of the people that were just providing the middleware are seemingly not able to build sustainable business models around it. Whereas if you look at Greendot, we're the banking license, the technology layer, the operations layer, and the user experience all in one place. So we are that one-stop shop. And our hypothesis is that the industry is moving towards that one-stop shop model. Then on the demand side, you mentioned verticals. There was this classic saying that everything is a fintech. I don't think it resonates as true in 2023. What our strategy has been that we focus on verticals where there's already an entry point into financial journeys of the end user. So think wealth and investing, think payroll, think gig workers, etc. So our focus has been on those specific verticals rather than trying to say everything is a fintech.
What about providing access to lower income individuals, democratizing access to the markets and to banking? What are your thoughts around that?
Well, I'll be doing a panel on it in a few hours as well, so you can
good
hear
practice,
it.
Sir.
If you look at the Greendot mission, we are very much focused on the low to medium income customers. But what we do believe is that you can't just retrofit what works in other segments and try to apply the same solutions to them. Our approach has been, we think about almost all the revenue line items and the cost line items from scratch. So what does customer support look like for a low to medium income customer versus a high income customer? And building solutions like that is the only way to build models in such a way that you can provide access to the low to medium income customers.
And that's what I think is so interesting about the emerging technologies that fintech is associated with. For that reason, it used to be larger institution, here's our products, here's how we're going to fit it into your life. Now it's like, I'm the consumer, this is what I need, this is what I want, every demographic is different.
Yeah.
And I think that kind of all feeds into being able to provide this access.
And technology is the bedrock for all the transformation you're seeing in the industry. Greendot itself, we underwent a complete technology revamp, which just finished earlier this year. Now what that enables us to do is build things in a more modular manner, build things in a way that's catered towards specific audiences, while keeping the costs down simultaneously. So the combination of these two, like cost savings and being able to build features that are specific for certain segments, that is what is taking us into the next generation of financial products. And I'm personally very excited for that, for the industry in general and Greendot specifically.
Yeah,
as well.
and I think it's an exciting topic to discuss because we really do need to think about bridging those wealth gaps. And there are a number of consumers who don't understand generational wealth, and I think this is a good opportunity for the industry to really lean in and even from a financial literacy perspective, to provide them with the tools to do so.
You mentioned that you had Stockpile on earlier.
Yeah.
The partnership that we have with them is, we've had this whole narrative around financial literacy for so long, but we've not made a dent around it. And it's because we've never built tools, real life tools to provide financial literacy. So the partnership that we have with Stockpile, it now gives, as a parent, you access to children bank accounts for kids, where you can set spending limits for them. You can do monitor their spend activity. You can encourage them to save for a certain goal. You can reward them for certain activities. We believe that financial literacy is about all these different tools rather than just blogs and webinars and seminars.
Yeah.
And so very excited to build these tools in partnership with folks at Stockpile as well.
That's awesome. All right, Simran, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.